Breaking news, explosive new emails in the Solyndra scandal. They give us some insight into just how much more than the $500 million in tax money went up in smoke with Solyndra. James Rosen got the scoop. He joins us now with the very latest. James.
David, good evening. Let's go back to September when White House Press Secretary Jay Carney said on the record that a man named George Kaiser, quote, did not lobby administration officials with regard to Solyndra. George Kaiser is a billionaire and one of President Obama's most prominent supporters. He is head of the George Kaiser Family Foundation and also a major investor in Solyndra. According to congressional investigators, Kaiser has visited the White House 17 times. These newly disclosed emails, courtesy of the House Energy and Commerce Committee, shed some light on the substance of those visits that Jay Carney described. A couple of weeks ago, Kaiser wrote to Solyndra board member Steve Mitchell in early March 2010, when Ken and I were visiting with a group of administration folks in D.C. who were in charge of the stimulus process. White House, not DOE, Kaiser stressed, and Solyndra came up. Every one of them responded simultaneously about their thorough knowledge of the Solyndra story, suggesting it was one of their prime poster children, unquote. Earlier that same day, Steve Mitchell had told the Ken mentioned in the other email, Kaiser Foundation executive Ken Levitt, quote, it appears things are headed in the right direction, and Energy Secretary Stephen Chu is apparently staying involved in Solyndra's application and continues to talk up the company as a success story, unquote. Of course, Solyndra went bankrupt, and the FBI this past September raided its offices and executives' homes. A series of events that was pursued with witnesses from the White House and the Department of Energy in a House Energy and Commerce Committee hearing that month.
Are you aware of anything that would suggest that Mr. Kaiser's donations to the President were a factor in determining whether to grant the Solyndra loan guarantee?
No, sir. Again, I wasn't there, but I have no reason to believe that.
I was not actively involved, but have no reason to believe that.
Still, another of these emails stated that aides to Vice President Biden, quote, about had an orgasm, unquote, at mere mention of Solyndra. Today, a White House spokesman accuses House Republicans of cherry-picking documents to distort the evidence. The Kaiser Family Foundation told Fox News in a statement today, quote, George Kaiser had no discussions with the government regarding the loan to Solyndra. That does not appear to be the case based on these emails. David.
Extraordinary information. James, thank you very much. Well, among the explosive emails in this doozy from Solyndra board member Steve Mitchell to George Kaiser discussing a possible second taxpayer-funded loan. Quote, apparently our application has been caught up with several other groups who were also wanting a second bite at the DOE loan guarantee apple. This started a policy discussion as to whether a company should get a second loan. John Silver championed the cause that they should, and he has just this week apparently won that battle. That is the email. Our power players join us now. Lindsay Piegza, Liz McDonald, and Nancy Skinner. Good to see you all. EMAC was almost a lot worse than what we thought it was.
Yeah, that's right, David. And that apple is a U.S. taxpayer that's being referred to in that email. By the way, you know, that that quote about the orgasm and I don't think that's not the O word you want to hear in the White House,
no,
right?
It's
You
not.
want to hear only President Obama. That's the only O word you want to hear. But look, here's the issue. The government has been on the attack against Wall Street speculators, oil speculators, financial speculators. How about going on the attack against government speculators? Every time they make an erroneous or bad bet with DOE guaranteed loans, then you curtail or you cut back on their own government pay.
Well, the question here is, there are several questions, but one question is how much political influence was used in the making of these loans. Lindsay, it seems clear from these emails that they were banking on their political connections to get the loans.
Well, there was clearly a conversation going on, but we still have to do further investigation to see how much of that political influence actually resulted in that granting of the loan. But it's clear that there was some wheeling and dealing behind the scenes, so we have to get more information and find out if the White House, in fact, put political gain above the American taxpayer.
Nancy, the White House is claiming tonight that George Kaiser, he's the big Obama contributor, who was a big contributor to Solyndra, that he never talked about Solyndra during his 17 trips to the White House. And yet we have an email that says, by the way, this is from George Kaiser talking to one of his friends on the board. A couple of weeks ago, when Ken and I were visiting with a group of administration folks in D.C. who were in charge of the stimulus process, White House, these are his words, not DOE, Solyndra came up. So he is admitting in these emails that while he was at the White House, he was talking Solyndra. Nancy.
Well, first of all, okay, First of all, White House. There are a lot of people in the White House. But what is the big deal here? You know what company who gets any sort of loan, DOD contractors don't talk to the officials, and to.
But the White House says it didn't happen.
No, of course, Biden was the watchdog. Biden was supposed to comb through every stimulus project and make sure it was good. So if he didn't talk to a company and they just mailed them a check like in the sweepstakes, that would be negligent behavior.
Wait a minute, these are
you're missing the point.
It collapsed because of market forces.
Emac, the point is the White House said today, as a result of being embarrassed by these emails, that Kaiser never talked to them about Solyndra on his 17 trips to the White House. These emails say exactly the opposite.
Really, David, come on. This isn't a month of Sundays. This is more than 4 months of Sundays. You didn't mention Solyndra. Personally, I doubt it. And, you know, we're talking about the DOE loan guarantee program that began under President George W. Bush. We haven't even begun to talk about the president, which Nancy is referring to, the president's own stimulus money that it went out the door to a green energy project. We don't even know about the corruption there.
Again, we're taking American taxpayer dollars, and these are being misdirected in order to gain political influence. And that's really the issue. That's the problem that we're having with these loan guarantees being granted to Solyndra. So we have to get to the bottom, and we have to see exactly how much political influence was pushed for this guarantee rather than them being granted on their own
Nancy, don't you want to get to the bottom of this? Wouldn't you like to know how much political influence was used to get these loans?
Sure. If there's a quid pro quo, you have a problem. But look at every company who gets any kind of contract or anything, and the government has to take risks too. If they just didn't take any risks, this company went belly up. And this started under Bush. You were right, Liz. These were and there was Koch brother money in this project at the beginning. But
I don't know
every
about that.
Government takes
Look,
some
what we're
risk.
talking about is money going out the door. We went after AIG retention bonuses. We should be going after Solyndra bonuses as well, and Fannie Mae and Freddie Mac.
That's right. The government wants the banks and Wall Street to be accountable. I want the government to be accountable.
Government Motors stock is going in reverse right now. 100 points. That is ugly, but it's not over. What about tomorrow? Our power players are back. Lindsay Piegza, Liz McDonald, and Nancy Skinner. EMAC, does the carnage continue?
I think the rockiness in the market continues. It feels like Europe is just chasing its own tail. It's chasing its own tail because it's talking about rescues of prior rescues of the former rescue, and until that Europe takes a page out of what the head of China's state investment bank is saying. He's saying, look, the entitlement nation is broken. It's time to stop with the indolent, slothful behaviors of people living on the dole over there, and you got to fix it. And until you do that, the bond market and the stock market is going to continue to be a financial pressure cooker.
So we have to learn from the Chinese communists is what it comes down to.
Well, what it comes down to, actually, is that the focus has shifted now from some of the smaller players to the larger players, namely Italy, which is the third largest economy over in Europe. So the market is simply acknowledging the broader economic implications of the sovereign debt crisis. Couple that now with European officials saying for the first time that a single country can leave the Eurozone. So this is threatening the composition of the Eurozone as we know it. And so it's no wonder that we saw continued volatility in the equity markets, as well as the euro dropping to a one-month low, as we do see not just the flow from capital going from peripheral Europe to the core, but out of Europe entirely.
Yeah. Nancy, what we are seeing here, and I talked about with Dick Grasso, is the unwinding of the social welfare state that Europe has been in for decades now. It doesn't work, the numbers don't add up, and eventually you pay the price. That's what's happening right now.
Yeah, but it's much ado about nothing, David. This is very insular thinking by the market. They're worried about their exposure to Europe, to U.S. banks. So why don't we lay it out on the table, see what that is. Our banks have huge cash reserves, huge capital reserves and profits. What is it? It's the uncertainty that is driving everyone crazy. The real crisis in our economy is those 99ers on the street who don't have jobs, so they can't spend money, which drives 80% of
they're
consumers.
concerned about that
crisis is that 401k, which is
They're
dying.
worried about the Eurozone falling into the recession. We are on the brink right now of seeing an entire collapse from country to country. That's what the concern is, and that's why the market is reacting.
You might as well teach a cat to bark if you think that markets are going to ignore what's going on in Europe and pay attention instead to the Occupy Wall Street movement. Here's the issue. I mean, the U.S., the second biggest export market behind Canada is Europe for the United States. That's a big deal for our manufacturers. And, you know, the idea that Europe can't fix its problems is so lame to me, because Germany, remember, David, a decade ago, was considered the sick man of Europe until it went through its own labor and welfare reforms and got its act together.
Well,
Germany's now a powerhouse.
I remember the United States, Lindsay, back in 1979-80, limits to growth. We were never going to grow our way out of anything again. We came back. You can come back from these things, but you got to take harsh steps in the first place.
Sure, but you know, there is a silver lining that while the world can't grow without the U.S. has proven consistently that we can grow without the rest of the world.
Really?
So even if we do see a slowdown in Europe, and that will trickle down to a slowdown in China, we'll likely see a decline in the demand for raw materials and commodities. So we might be able to see a little bit of price reprieve. I disagree with you a little bit. Nancy, the fact is that in the 50s, when we did grow quite well without Europe, because Europe was busy recovering from World War II, we did quite well in the 50s, but we are much more interconnected now. Wouldn't a recession in Europe boil over to, if not a recession, or at least a bigger slowdown than we're in?
Well, that's because we had all the manufacturing here. Then we shipped it all to China. So now China's giving advice on this because they have slave labor. We are not as dependent, David, I agree, on the European situation. Some banks are, yes, but it's nothing like the catastrophe of losing consumer spending, Liz, which is 80% of GDP. So when I bring up those 99ers, I'm talking about the lack of consumer spending. That is the biggest threat to our economy.
Very
not Italy
quickly,
or
gang,
not
we have to wrap
Greece.
it, but tomorrow, up or down? Lindsay?
Down.
What do you say, Emac?
Sideways, up, down.
Sideways, up, down. She's not sure. Nancy, what do you say quickly?
They'll gain their sense, and we'll be back
All
up
right.
tomorrow.
Coming up just